Hey everybody, Smart Silver Stacker here. Hope you're doing well. So, the more I kind of grok the silver takedown that we got on Friday, this huge record-breaking crash, right? Silver closing down 26% in a single day, and at the lows of the day, it was down, even more than that, like 35%. The more I'm beginning to believe that it was some sort of engineered crash of the silver price. Now, if you've watched the channel for a while, you know that I, try to be skeptical and objective about this sort of thing. And, I don't have definitive proof that that was the case. But, the more I think about it, the more convinced I am that that is what took place. But more importantly, moving forward, is what that has done to the physical silver market. We're going to get into that in today's live stream because this is going to have a major impact, I believe, on the the silver market. It's all very bullish for silver, is my take. Just look at what's happening today. We're up over 5% in overnight trading here. So this could very well be the recovery that's going to, initiate a run to record all-time highs. Now, could it be a dead cat bounce? Yeah, sure. Anything's possible. But I'm going to go over some stories today regarding that takedown. And then, again, more importantly, what impact that is having for physical silver bullion, because it's very significant. So let's just take a look at the chart here and see what happened. It's Monday night. We're in the Tuesday overnight trading now. We're, on this chart, this is daily candle. The green candle now is like Tuesday's trading. So Monday is done. And I think that's important because Monday was a critical day for silver. Monday was a day when we were going to see, does the sell-off continue? Does the silver price plummet? And it did actually drop slightly lower than the lows of Friday. I want to switch this to a 1-hour chart. But the low that silver put in was around $71.31. That was late Sunday night. That was 1 a.m. or Monday morning, super early Monday morning, right? So that was very thin liquidity. I don't put much stake in that. And more importantly, if you look at this chart, this is again back to the daily, some very important developments here. We've got this Fibonacci retracement I've drawn on the chart here. We talked about this yesterday. And, on Friday, that 0.618 retracement, it held. It proved to be support. And then Monday, earlier today, that level was again tested. Now, remember, that spike down was in very thin liquidity overnight trading. During the day, we didn't actually drop too low. And this level turned out to be support again. All it really matters is the, opening and close for the day. And we closed well above that level. And now look what's happening in the overnight. We're getting a bit of a recovery. Now, if you want to get your hands on some free silver as part of a giveaway, then check this out. And then we're going to get into what's happening in physical silver.
For the first time ever, SD Bullion is giving away 2 monster boxes of silver coins, but not just any silver. Learn more today at sdbullion.com/sweepstakes.
So that's Chase over there, CEO of SD Bullion. And this is an email that they sent out, which I just wanted to read to you real quick because this gives you a little bit of insider info as to what's happening at, an actual physical bullion dealer, a big one, SD Bullion channel sponsor, right? And he wrote, after the historic drop in silver on Friday and bleeding into today, I wanted to jump on with our COO, Cole Keller, and give everyone an update on what we're seeing at SD Bullion. So you can check out the video they did. It was interesting, but it's all pretty much summed up right here. Said there's a ton of new customers flooding into this market. I'm hopeful that this update will give everyone a good look at what to expect in the physical gold and silver market for the next several weeks to come. Physical demand has absolutely exploded. And, I won't read everything to you here, but he did write that demand on Friday was 2.5 times higher than our previous all-time peak. So, if this was an engineered takedown by the banks. Why would they do that? Well, we'll talk about that briefly as we examine some of this. But this ultimately, I think, is going to be short-sighted for them, and it's triggering a record surge into physical metal, which is a good thing for stackers, and I think it's a good sign for these markets. Now, let's take a look at some of the stories, right, from the past couple of days. And let's just talk about what happened. So on Friday, we got this huge smackdown in silver. And a lot of strange things happened on Friday that coincided with this huge record-breaking smackdown in silver and also in gold. But it was, really big in silver. And I'm sure that, in previous instances, silver has gone down like 25%. It's gone down that way. It's corrected that way. But never in one day. And same thing with gold. Gold was down almost 10%. Gold has gone down 10% before, but it's never gone down that much in one day. And in that day, some interesting coincidences here. We had a bank in Chicago failing, the first one of 2026, right? Metropolitan Capital Bank and Trust in River North on Friday. Now, that alone is not that big of a deal. Small banks do fail periodically. They get taken over by other banks. The FDIC makes sure that all the depositors are made whole. In this case, this Detroit-based First Independence Bank acquired all of the deposits. But the fact that this happened as the silver price was getting smacked down right at the end of the month too, which is an important day, right? The January 30th, the last day of trading for the month. We also had, and I covered this in a previous live stream, but let's just revisit it real quick. We had these glitches at the LME, right? We had the LME trading glitch that capped a wild week. On Friday, the London Metal Exchange suffered a 1-hour delay at the start of trading. Strange, right? That would just coincide with the first bank failure of 2026 and a record smackdown in the price of silver. These banks, one reason that you might want to bring the price of silver down is if you, say, have a short position, right? Now, allegedly, J.P. Morgan had a large short position that they closed out right around here, right around $70, right on the lows of the day. Now, I believe that is according to a leaked memo. So take that with a grain of salt, right? No guarantee that was even the case, but I suspect that is the case because the whole thing, it just reeks of manipulation, right? It wasn't that long ago that we had the CFTC ordering J.P. Morgan to pay a record $920 million for spoofing and manipulation of the precious metals markets, right? So this is not like a conspiracy theory. This is a real thing that happens. We've covered this in numerous previous videos. But then something else happened, which was kind of interesting on Friday. We had HSBC in Hong Kong suffering temporary system shutdowns. Now, again, it's not that unusual to see a bank experience some kind of glitch, but it's weird to see all of these things happening exactly at the same time. Let's see. We've got this story regarding HSBC. Sorry, I'm trying to find it in my queue here because this was an interesting story regarding HSBC. Oh, yeah, here it is. Goldman Sachs, HSBC, and others to pay $20 million over a metal trading probe. So this is from 2024, but HSBC was part of one of these banks that had to pay $20 million to settle a long-standing class action lawsuit regarding the manipulation of the platinum and palladium markets. So, again, this is kind of a questionable actor here. It's all very circumstantial. There's no, definitive evidence that there was some kind of market manipulation here. But, it wouldn't be real shocking to find out that was the case either. But again, the fact that we are seeing the surge in physical metals, the demand for physical metal, which had been kind of languishing, if you recall. With silver up over 120, everybody was trying to unload their physical silver. All the retail investors, right? Everybody was trying to find a buyer who could buy your silver for that price. And as we know, the actual bid for retail investors was actually somewhat below the spot price. Maybe you could sell for 110, maybe 105. But now that has completely flipped with the crash. And I put this on X a couple hours ago. The banks were able to pull off one of the biggest smackdowns ever in silver, but ultimately this will prove to their detriment as it has sparked a massive surge of physical buying. And the reason I share this with you, and by the way, you can follow me over at x.com/stacksmarter, was this response from Ryan Lang, who said, I wonder how unhinged the bankers can be, though. What's stopping them from unleashing another mega slam? Well, and to be fair, they could unleash another mega slam, right? If we want to look at where silver could potentially fall, and there's no guarantee that the smackdown is over, we can put up, let's say, a 200-day moving average here, this blue line. Well, that would take us down to 54. And by the way, as long as silver remains above its 200-day moving average and the slope of the 200-day moving average remains upward, the bull trend in silver is intact, right? So silver hasn't really suffered any structural damage here. And especially if this was, some kind of market manipulation, basically what it did was it ran all the stops, got rid of all the leverage, got rid of all the weak hands, and now who's left? Well, a bunch of, diamond hand stackers like yours truly and a lot of you watching. Like, I'm not selling my silver just because it drops. Silver drops to 50. I'm not selling my silver, right? I still have the same number of ounces. In fact, I actually bought some silver on Friday, some 90% junk silver because, that stuff is trading under spot right now. And you know how I feel about that if you've been watching the channel for a while. I mean, they're probably melting ungodly amounts of 90% silver right now. And to me, that's just a good thing, right? It's cheap. It's got a shrinking supply. And, eventually I suspect that the premium situation there's going to flip. But I mean, what happened was everybody started loading back up on physical silver, retail investors. And to me, that's probably the best thing you can do here. If silver drops, pick up some more. It's not financial advice. If it drops more, pick up some more, right? My personal dollar cost average is way below where we currently are. So I'm not sweating it, right? $80 silver sounds pretty good to me. Keep in mind that silver, I think at current levels, I mean, let's switch this to a 12-month candle. Silver is up right now, year to date, 14.9%. It's the beginning of February. That's got to be one of the best performing assets of 2026 thus far, despite the smackdown, right? So it's funny, the psychology of how this stuff works. But, a banker smackdown, if you've been stacking for years like I have, this is nothing new. And I do suspect, I think the highest probability event here is that this is going to be a very short-lived but severe decline. So it could drop a little further over the coming days, but I think that by February we end, significantly higher than we currently are. And there is precedence for this, right? So looking at the daily chart, you've got the RSI on silver, the daily, down all the way to 45. So the overbought condition that we had seen is completely eliminated by the recent correction, right? On the 4-hour, which, I like to look at the indicators on the 4-hour because I find that it's the one that tends to be the most useful as a forecasting rather than like as a lagging indicator. And you'll notice that on Monday here, late Sunday night, the RSI got down into critically oversold territory. So that kind of suggests that a bottom's in, right? If we zoom out, I mean, the last time that we had the RSI under 30, that was a great entry into silver, right? That was the correction after we rose above 50. We kind of had this smackdown down to around like 46, and that was in October, so 4 months ago, when silver was down at 46. Obviously, that was a good entry point. Even with the recent smackdown, you're still way up on your silver if you bought then. And the previous, let me adjust the scale here. Previous time prior to that we got down into this oversold territory on the RSI was back in August. That was clearly a good entry point. That was with silver around $37. And then let's see, in April, I know April we got into critical oversold territory here. We got really, really oversold. The RSI got down into like the teens. And that was clearly a great entry point for silver. And, bull market is intact, right? It's still moving up. So we get these big corrections, and then we get a resumption to the upside. This one just happened to be unusually large, and potentially for some of those reasons that I outlined regarding, the banks. It's possible, like, especially if there's coordination from insiders, and who knows how, all the details of this were, but part of what contributed to the sell-off was that announcement of Kevin Warsh, the new Fed chair. So, maybe even the administration, maybe the Fed, they could have been in on this. Who knows, right? I know that there's some bad actors out there among the banks, so nobody knows for sure. It's difficult to make trading decisions or investment decisions based on this, and certainly don't make investment decisions based on what you hear, me or anybody else talking about on YouTube. Do your own due diligence. But it just kind of reeks of strangeness to me, and the fact that physical buyers are rushing into the market, it's a very good sign, right? And it's not just in the U.S. This is a story from the South China Morning Post that was published. I believe this was from today. Chinese gold and silver investors face gut check amid volatility fund suspensions, and there's reports there that amid the tumult, because they had a correction there too on Monday. My understanding, and it's kind of hard to find exact information about the Shanghai Gold Exchange, but my understanding is that it opened a limit down, meaning that their circuit breakers actually kicked in, which is another weird thing about Friday, because they're supposed to be on these commodities trading exchanges, circuit breakers, right? So like if silver drops by more than 10%, it's supposed to kick in a circuit breaker to stop a crash. But that didn't happen on Friday, despite the fact that it was down at one point like 35%. So why no circuit breakers, right? And in China, on the Shanghai Gold Exchange on Monday, today, earlier, they actually did have their circuit breakers kick in. But it looks like the prices there are actually recovering. We'll take a look at that in a minute. But this is just, anecdotal, of course, but it kind of shows you what people in China may be thinking. She said, Agnes Yang, a 30-year-old retail investor in Guangzhou, said, I am watching the gold price closely this morning. As long as the price keeps falling, I will keep buying gold gram by gram. It will definitely pick up again. Sounds like a smart stacker to me. Sounds like someone who knows what's up. And there's just, in this article, several anecdotal reports about people who are picking up gold and silver in China. And also the Lunar New Year, it points out, is a traditionally peak gold buying season. And I think that's coming up. The market's going to be closed February 15th, February 23rd, and February 17th, February 19th in Hong Kong for the Lunar New Year. So expect demand for physical in China to pick up as well. But it is surging here in the U.S. as well, like we saw in that email from SD Bullion. On Friday, they had 2.5 times the business of their previous biggest day, which if I don't remember them mentioning it specifically in that email, but it was probably in March of 2023 when Silicon Valley Bank started to fail. And by the way, if you recall back then when Silicon Valley Bank started to fail, the premiums on Silver Eagles and also on junk silver soared, and that's something I've been talking about for a while. The reason being that junk silver, if you're a stacker right now, is a lot cheaper than some of the other physical bullion products. Like if you want to go buy kilo bars or 100-ounce bars or even silver rounds, there's a significant premium over spot at the moment. But junk silver is selling under spot. Now, there's a reason for that. It's because the refiners aren't buying it anymore because they're backed up. And, the demand right now is just for 0.999 silver. But that could change in a heartbeat, especially if we start seeing more problems in the banking system here in the U.S. I mean, just look at what happened in March of 2023. So I would take advantage of the low junk silver prices. And, it's funny because it's like all of the psychology with this stuff. You've got people now who will say, oh, you shouldn't buy junk silver because they can't melt it down to, they got to refine it. It's not 0.999 fine. But then those same people, when there's like a financial crisis and the premiums on junk silver blow up to over 50%, they'll say, these greedy dealers, they're just trying to rip us off and gouge us with premiums. When in reality, it's just like, junk silver is kind of a parallel market and it's governed by the rules of supply and demand, just like everything else. But anyway, in China, they're buying gold. That's the long and the short of it. And I wanted to cover a few other stories here. This is an interesting one. This is relevant to the precious metals. So we covered a story a couple weeks ago about how there was this bill before the Senate and the House to create a $2.5 billion strategic metal stockpile or critical mineral stockpile. And the reason this is relevant to silver is because silver is considered a critical mineral now. It was added to the list by the USGS at the end of 2025. And this was today in Bloomberg, how we're now launching a $12 billion critical mineral stockpile. It's kind of a weird setup, the way that they're setting up. You can read this article if you want, to get all the details of it. But it's a $10 billion loan from U.S. Export-Import Bank and $1.67 billion in private capital. And then it's a partnership between manufacturers and producers of these minerals. They have a commodities trading house that's going to go out and buy up these critical minerals, and then manufacturers like Google's one of them, GM I think was one of them, possibly Apple. There were a bunch of these companies who would then have kind of access to these things, but they have to agree to refill the stockpile at a certain future date. So the idea is that this is going to smooth out volatility in supply chain, so you don't see big price fluctuations. It's like having a buffer of these critical materials. At least that's the stated purpose. But it is going to create $12 billion of additional demand for the critical minerals. So that's certainly significant, and it just goes. It's not necessarily that this one move is going to be like the thing that drives the metals so much higher, although rare earths did get a big boost on this announcement. Obviously didn't do much to assuage the silver market, but it is possible that some of that $12 billion could go towards silver, because silver is certainly important for making all these things that they cite here. As a reason, it's useful for electronics, AI, defense industry, all sorts of stuff. You need silver to make it. But this is just illustrative of the trend towards demand for critical minerals and supply chain disruptions, and how that's kind of what we're heading into here. That's what 2026 is going to be all about, is competition for these critical minerals. And then I wanted to also shed a little light. I had mentioned in a recent live stream about how Xi Jinping over in China had stated that he wanted the Chinese renminbi, the yuan, to potentially serve as a global reserve currency. And it looks like actually what this is a speech of his from 2024 that was recently resurfaced by this Kishi magazine. And it was based on this 2024 speech, but they highlighted this quote that said, first, it should have a powerful currency widely used in international trade, investment, and foreign exchange markets, holding the status of a global reserve currency. But this is almost more interesting than the president over there, Xi, making these statements now. It's the fact that this magazine, I'm probably mispronouncing it, I have no idea how to say it. It's a Qiushi, no clue how to pronounce that. But this is the Communist Party's flagship journal, and they are rehashing this idea now. So it shows that there is a push to drive internationalization of the Chinese yuan. And this is just part of this World War III that we've been entering into for years now, and which encompasses a lot more than physical kinetic battlefields, right? It's in the financial realm. We've seen this play out with tariffs, trade wars, sanctions. And part of the Chinese gambit is to undermine the U.S. dollar. In fact, I put a video out back out in, I think, 2022. You can go find it if you want. It's called De-Dollarization and Silver. And in that article, or in that video, I go over a report from the Congressional Research Office, which talks about how this de-dollarization plan has actually been in effect for a decade plus, right? And so we've just slowly been driving towards this moment, and you're seeing it play out now with the volatility in the gold and silver market. Let's look at the gold chart too. I wanted to look at that. You're seeing it play out here because silver and gold, silver especially, and it's a critical mineral, but it's also got this monetary demand, and gold has this reserve status. We've seen it surge, and the fact that I think they're showing so much volatility, like historically elevated volatility, is a sign that we are really going through the death throes of the existing financial order. And as that plays out, I suspect that things are going to become even more volatile. Let's look at gold. This is the gold chart here. Excuse me, I got a little hiccups there. So this is the gold chart, and we've been following this pattern. This is the most recent consolidation that gold had for months. It broke out of that and screamed higher all the way up to 5,600 before we got the big Friday smackdown, right? But look at what it did. It retouched on Friday the top trend line here. Now today the sell-off in gold continued, but interestingly, it looks like selling was rejected right below this bottom trend line, and now we may be breaking back out of this pattern. So this is just like a retest, albeit a significant one, of this consolidation pattern that gold broke out of. And if we can manage, say, a daily close tomorrow above this top trend line, that's going to be very bullish in terms of the technicals for gold, because that's going to suggest that this was resistance for a long time. Now it's proving to be support, and that could set us up for the next run higher. This is the dynamic that we've watched all through this gold and silver bull market. Gold and silver move higher, they correct, but albeit to a higher low. They consolidate, and then they make another move higher. Now it's just that this is that move on steroids. And the fact that investors are coming in and gobbling up physical gold and silver here, again, it supports the idea that we're going to see a rapid recovery from these levels, because it means that prices below this level are not sustainable. And to the comment that Ryan posted, I had read this earlier. He said, I wondered what's stopping them from unleashing another mega slam. I wanted to address that. What's stopping them is the fact that their paper mechanisms will ultimately lose all credibility, right? This is like not the sort of trick you can pull over and over again and not have, far-reaching consequences. Like, could they do it again? Yes, they could. They could smack the price down again if that is in fact what happened on Friday. But every time you pull that trick, right, it reduces confidence in your system. I mean, think about what the LME did, right, with nickel back in 2022. Nickel had a massive short squeeze. They halted trading. They smacked everything down. But the difference between gold and silver and nickel is, one, there's now a major gold and silver exchange in China, in Shanghai, right? So there's some competition to the Western financial system in terms of like the COMEX and the LME. But also, you can actually take delivery of your gold and silver pretty easy as a retail investor, or even as a bigger investor, right? I mean, you can store a lot of value in gold in a very small space. So it's not like nickel, where investors sort of are relegated to trading on the paper exchange. It's like eventually the paper exchange will lose all credibility, and then the paper price will stop working. And that is likely what will be the ultimate outcome. Now, I don't know if that's going to happen tomorrow, if it's going to happen a year from now, if it's going to happen a decade from now. I don't know. I don't have the answers to those questions, but just kind of mathematically, it sort of makes sense when you have these casino-like paper facilities where the price of a real tangible underlying asset, one that's in high demand like gold and especially silver, where you have these supply deficits year after year, can be manipulated downward. That's not sustainable long term. And it's funny, on X, I don't have any of the specific comments pulled up because I'm just not that petty to try to address every negative comment I see on X in real time. But I will say that I've seen a lot of people on X, a lot of the people who are sort of experiencing this like Schadenfreude for silver investors, they like seeing us suffer, right? They like seeing the smackdown. But they're saying, what happened to the silver shortage? I thought there was a silver shortage. Well, it's important to note that there is a big difference between these two words, deficit and shortage, right? And there is a deficit in the silver market. That doesn't mean that there's a shortage right now. You can actually go out and find physical silver. But when you have a deficit and you have a perhaps failing confidence in paper markets, eventually you're going to get a shortage. And a shortage doesn't mean that you can't buy something, by the way. It just means that the price goes up a lot and that it can be hard to source supply, right? That's all a shortage really is. There's always going to be some silver, and for the right price, you'll always be able to get some. But how high is that price going to be? That is a very different question. Now, looking at some of the other metals, we got platinum right now staging a bit of a recovery. We're kind of off the highs, but again, this is overnight trading. We got to see what happens tomorrow. It's a good sign that we've got gold, platinum, and silver all in the green right now and overnight, but we need to give this thing a little time to shake out. The gold to silver ratio does seem to be coming down after touching this gold line, which is a previous low from 2021, previous low of the gold to silver ratio. We touched that, we fell sharply. So that's also kind of a bullish thing. Just remember, when this is falling, that means silver is outperforming gold, typically to the upside. So, we've seen this ratio collapse as the silver price has been soaring, and it's still at 58. Remember, it was up over 100 just less than a year ago. So silver is still doing pretty well here, but silver's not for the faint of heart. You can have these massive smackdowns, whether they're engineered, whether they're natural market forces. I think I've kind of made it clear what I think this most recent one was, but you can never be certain about those things, right? And then we got the M2 to silver supply. This is an important chart to keep an eye on. This chart is the one that I was looking at, which suggested we were going to get some kind of a correction around 120. Now, to be fair, I didn't know that it was going to be such a massive correction, but I did anticipate that we would get some support here to this ratio. And remember, as this ratio goes up, that means the silver price is going down. As this ratio comes down, it means the silver price is going up. And, we broke through a critical resistance here back in the end of 2025 in December. November was the candle that broke through this line of support that goes all the way back to the 1980 and 2011 precious metals market peaks. So when we touched this green line, which was representative of the low from 2011, that bull market, it made sense that we would see some kind of a reaction, and we certainly did. But once we break through this line, the next meaningful support is down here at the 1980 low, which would imply with the current M2 money supply like $700 to $800 silver. And by the time we reach this level, I suspect there will have been a lot more currency creation. So that means we're talking like 4-digit silver, which is ultimately where I still suspect this bull market is going to wind up. Right? You don't get a breakout from this kind of a pattern, this, huge, what's going on? This huge bull market here, this huge cup and handle pattern, this is not the sort of thing that resolves in a couple of months, right? So this is the long-term chart of silver. We've looked at this chart many times, but this just tells me that the bull market is still in effect. And we are in the early stages of this bull market, albeit following a massive correction. And, if history is any guide, what silver has done in this bull market thus far, then pullbacks like this are good entry points, right? Like if you liked silver above $120, then you ought to love it at 81. Just my take. But anyway, that's it for tonight, folks. Stay safe and happy stacking. Do me a favor. Oh, by the way, thanks for everybody who's subscribed to the channel. We broke 100,000, so couldn't have done that without all of you. Huge move for the channel. It's awesome. Stackers are the best viewer community out there, and I'm thinking about what to do to kind of celebrate. I'll follow up with that in coming live streams, so stick around for that. And anyway, thank you so much to everybody who did subscribe. If you haven't yet, click that subscribe button. Stay safe and